Hey everyone, welcome back. My name's Levi Woods. Today we're talking about the Theta Fairy, which is a kind of a brand new trade for me. I've been trading it less than a month, I guess just over a month now. It's a trade that I learned from one of my patrons, which is amazing, who recommended a video that Scott Stewart had made. So he's another YouTuber. He's made some fantastic videos, and I immediately started to place this trade. Now, because of the setup of the trade, which I'll go over in this video, I wanted to build a specific tracker for it. I wanted to build a Theta Fairy Tracker because I can absolutely see that this is going to be a trade that I'm going to be putting on for the next little while because I can see the advantages that it has. So I'm pretty excited. And today we're going to cover the Theta Fairy Tracker. Now remember, if you guys are first-time viewers, my name is Levi Woods. This is Drawbridge Finance. I don't offer financial advice in any way. What I do is I build tools for traders. So today we're looking at the Drawbridge Finance Theta Fairy Tracker, and I'm going to show you kind of the basic setup of the Theta Fairy. The idea is pretty simple. It's a little ES strangle. It's done overnight. Now, so this is typically for traders that are doing multiple entry iron condors or zero-day-to-expiration condors that have capital that they have allocated to zero-day-to-expiration trading during the day. What ends up happening with traders like that, like myself, at the end of the day, we have capital that we're not using overnight. The Theta Fairy is kind of a little tiny trade that we can put on that gives us like an extra $100. That's the idea, is to make $100 a night on a single contract of trading the ES, which is the S&P 500 E-minis. Super simple. Basically what we're doing is we're collecting a credit somewhere between about $6 and $8 just before the futures market closes. So for Pacific Standard Time, the market closes at 2 p.m., which is an hour after the regular market hours. So sometimes about a half an hour after regular market hours, I'm going to place a trade. I'm going to collect. I'm going to sell a put, I'm going to sell a call, and I'm going to collect some sort of credit between $6 and $8 to open. Now the ES trades at 50 points. So if I get filled at say $8, I actually am only collecting a credit of $400. Then what I'm going to do is I'm going to set some sort of profit taker. Now I know that Scott trades only with a profit taker. You can definitely trade this with a stop loss, which I've built into the tracker, and I'm going to show you that as well. Let's get into the tracker and then you can kind of see how it functions. All right, so the sheet is actually pretty straightforward. Like all of my sheets, there's very basic instructions, fill in the white cells. That's kind of how they function in general. So you see at the top, if we look at cell A1, it just says current ES price. And then in cell B1, what it's doing is it's pulling market data from an external source to find out the price of ES. Now, it has been fairly reliable. The data is slightly delayed. So right now, the ES is actually trading at 416.75, and this is actually showing at 415.75. So it's important to use your brokerage and your real-time data, but this sheet will pull that slightly delayed data. The next cell over to enter would be the commission fee. Now in this particular trade setup, I'm selling a strangle to open, I'm buying a strangle to close. And so the commission that I enter is the total cost of the entire opening or closing of the strangle. So in my case, it's actually $1.42 per leg, $2.84 is the commission for both legs. So I'm going to put that in. What that does is it automatically populates further down the sheet. You'll see how it works. The next tab that we fill in is actually cell A7. Now, this is January 6th of 2023. I've kind of pre-built this for the next decade. So all you have to do is in 2024, if you're watching this video, all you have to do is just type in January 5th, 2024, and it will automatically populate this out so that it's just showing the Monday to Friday expirations. Now, this is an ES trade. It can be done Monday through Friday. So the idea is that today, which is February 23rd, I'm actually opening the February 24th expiration. So I will be putting it in the line that is the expiration. The other thing that the sheet does is it kind of tracks along and it only calculates the year-to-date loss based on the current date. So because today is the 23rd, it's calculating the dates before the 23rd, but it does not calculate any dates past that. That means that this chart is going to kind of dynamically grow over the course of the year, and we're going to get to be able to chart our profit and loss. Up in this section, it's going to make a lot more sense once you see it populated. Basically, it's going to show you how many trades in January made at least $100, how many trades made somewhere between $0 and $100, and how many trades were losers. We're going to look at the total number of closed trades. That's going to show the win rate, and then the monthly trade or the monthly change. Then it's going to show a little chart of the wins versus losses per month as well. Lots of little features built into this. I think it makes a lot more sense when you look at one that's populated. So let's take a look, and we'll look at today's trade, and we'll kind of see how I entered it. Stock's trading around 40.15. I am selling a short put at 39.70. I'm selling a 40.60 call. I'm entering one contract, and I'm collecting a credit of 7.50. So if I was to do this right from the start, I would be typing in 40.15, I would be typing in 39.70. Now you'll notice that I've built things into my spreadsheet. This is one of the reasons I use Google Sheets, is because the color coding is amazing. So if I accidentally put this in as like 40.70, it will highlight red. It will say, hey, there's a warning here. Your short put should not be higher than the current value of the ES. This short put has to be lower. Subsequently, if I put a call in here that is lower, it will also turn red. So say I put 4,000 level in here, it will be red. So there's some indicators in here that help us enter the trades correctly to make sure we're getting into the right trade. So I'm going to type these in. So we sold the 40.60, and I sold one contract, and I collected $7.50. As soon as I type in the 750, it gives me my profit taking price. Now, the way that this functions is basically just subtracting 2 from the value. The idea is that it's going to be, we're going to be targeting $100 profit. So that's all it's doing. It's taking the 750, it's subtracting $2. You could easily change this if you wanted to just $2.25. That is something that Scott does. He sometimes targets $2, sometimes targets $2.25. It's totally up to you, totally customizable. I don't lock the sheets in any way. The next thing I can do, and this is optional, is I can set a stop loss if I wanted to. In this case, I can choose how much I want to risk. Now you'll see with this particular trade, the first couple of days I did this, I didn't put any stop loss in. I just sold it, and in the morning I closed it for a debit, and I made my $100. You see the first 4 days, $100, $100, $100, made a profit. When I was starting to play with it a little bit more, I thought, well, what happens if I put on a bracket order, if I put on a stop loss? I played them really tight the first couple of days. I said, well, what if I limited the amount of risk that I'm taking? So I can plug in a number here. I can put, if I only want to risk $2, it calculates out what the stop order is. Then you can see that I placed that stop order and it was actually stopped out. There's a little tiny bit of slippage that occurred. So even though I had it programmed to stop at 12, it actually stopped at 12.25. The next day, 11.50 stopped at 11.75. Then the next day, I still had my stop at 11.50, but this time it never got to it and it was actually profitable. This was not working. You can see very clearly that having only a $200 max risk on this, I was getting stopped out way too frequently. I had a $200 loss 4 times in 5 days. I took a day off of trading. I kind of reassessed what I was doing. I put another one on. This time what I did was I increased my amount of risk, 600, put my stop at $18, closed profitably. And I had done this quite late in the day. I collected a smaller credit. This was just a small little trade. Over time, what it's doing is it's tracking this performance. And it's also showing me how many wins I had. In January, the first couple of days that I did this, I had 5 winners, but I also had 4 losses. I only had a 55% win rate. Now in February, I'm doing way better. I have had these bigger stops. One of the problems is, though, that I believe these stops are a little bit too big. The setting a $600 risk and having these stops way up here at $20 as a $20 stop order, my losses are pretty big. And I think that I need to make an adjustment to this. And so there's definitely some discussion going on in my group about what the stop losses should be. It's got to be somewhere between 200 and 600. And I may start playing these without stop losses at all. Just take assignment if it happens. I'm comfortable with that, doing single contract, because I have a large enough portfolio to do this. this trade takes about $12,000 in capital. So that would be the capital allocated if I was to be assigned. Then I could either sell short puts against it if I was assigned the call, or I could sell short calls against it if I was assigned the put. Because I'm either going to end up being long or short the ES if I'm assigned on either side. The other things I should show you is if I'm not setting a stop order, or even if I am, it indicates that this trade is open, it won't calculate it out until I actually put in a value here. So, if this works out tonight and I take my 550 profit target, it will show that I will make a profit of $94 overnight, and it's not going to update this total until after midnight of the 23rd. It'll automatically populate this out and show on the chart. That's it. It's pretty simple. So hopefully you guys enjoyed that. If you have any questions, please reach out to me directly. And as always, thanks to all my patrons, thanks to all my supporters and viewers. If you don't already subscribe, hit that subscribe button down below. Click like if you love the video. Thanks so much, and let's get rich together.